Car sales are surging in a way no one predicted, driven not by excitement over new models, but by fear of what's coming next. Tariffs, electric vehicle EV policies, and looming price hikes have created a perfect storm of buyer anxiety, pushing consumers to rush into purchases before costs skyrocket. But here's where it gets controversial. Is this a sign of a healthy market, or just a panic-driven blip? And what happens when the fear fades? Let's break it down. Cox Automotive recently revised its 2025 U.S. new vehicle sales forecast upward to 16.1 million units, up from 15.6 to 15.7 million earlier this year. This would mark a slight increase over the 16 million vehicles sold in 2024. J.D. Power and Edmunds have echoed similar predictions, with the latter estimating 16.2 million sales. The numbers are impressive, but the why behind them tells a more complex story. The surge isn't just about cars, it's about timing. Buyers are rushing to secure vehicles before potential tariffs and the expiration of a $7,500 federal EV tax credit at month's end. Take EVs, for example. Sales spiked in August as customers scrambled to qualify for the credit before it disappears. Similarly, earlier this year, President Donald Trump's tariff threats sent shockwaves through the market, prompting buyers to act fast to avoid future price hikes. The market is being fueled by policy uncertainty and a booming stock market, explained Charlie Chesbrough, a senior economist at Cox Automotive. Consumers are choosing to buy now rather than wait for costs to climb. While this pull ahead in sales has been a lifeline for automakers this year, Chesbrough warns the pace will likely slow in Q4 and 2026 as tariffs and tax credit expirations fully take effect. So who's winning in this race against time? Big automakers like General Motors, Toyota, and Hyundai are grabbing market share, with GM leading the charge by increasing its U.S. market share by 1 percentage point compared to last year. Ford and Toyota are expected to gain 0.4 and 0.6 percentage points, respectively. But this success story isn't universal. Smaller or niche brands, think Nissan, Volkswagen, Subaru, and Tesla, are losing ground, with Cox estimating significant declines in their market presence. Even Stellantis, owner of Jeep, continues to struggle after years of sales erosion. And this is the part most people miss. The bigger players aren't just riding the fear wave, they're adapting. Regulatory shifts, like the elimination of fuel efficiency fines and corporate tax changes, have helped offset some of the pressure from rising costs. But can this strategy last? What happens when the panic subsides and consumers realize prices haven't actually dropped? Will the market rebound or collapse under its own momentum? Here's the kicker. Automakers are set to report third-quarter sales and earnings in the coming weeks. These numbers could either validate the current frenzy or reveal cracks in the foundation. For now, though, the message is clear. Uncertainty is a powerful driver of demand. But is it sustainable? We'd love to hear your thoughts. Do you think this surge is a smart move for buyers or a recipe for regret? Sound off in the comments below.